Federal Reserve building, Wall Street traders headline reading, rate cut in sight, inflation cools, and Fed shifts tone. After 2 years of aggressive interest rate hikes, the Federal Reserve is finally hitting a shift and markets are listening. The central bank just assigned signal it may cut interest rates as early as September, making a potential turning point in the fight against inflation. Jerome Powell at a press conference. Jerome Powell said that we are seeing continued progress on inflation and a modest cooling in the labor market. If those trends persist, rate cuts will be appropriate. It's the clearest sign yet that the Fed believes the US economy is on track for a soft landing, slowing just enough to tame inflation but not enough to trigger a recession. Timeline of rate hikes from 2022 to 2024, with arrows pointing down in 2025. The Fed's key interest rate currently stands at 5.25% to 5.5%, its highest level in over 2 decades. But with inflation cooling and job growth softening, the pressure to start easing has grown. So what's changed? First, inflation is finally retreating. The latest consumer price index showed annual inflation at just 2.4%, the lowest since early 2021, and inching closer to the Fed's 2% target. Bar graph of CPI over 12 months. Second, job growth is slowing but not crashing. June's job reported showed just 115,000 jobs added, the weakest in nearly 3 years but still positive. Help wanted signs small businesses. The signals a cooling labor market, not a collapsing one, exactly what the Fed has been aiming for. And third, Wall Street is responding. After Powell's comments, markets surged. The Dow Jones gained over 400 points, the Nasdaq hits a new 2025 high, and bond yields dropped, reflecting investor expectations of lower rates. Market tickers and green arrows. Traders now put the odds of a September rate cut at nearly 70%, according to the CME FedWatch rule. So what does this mean for you? If you are a borrower, mortgage, auto or credit cards rates could start to calm down. If you are an investor, lower rates could boost stock prices and cooperative earnings. If you are a saver, returns on high yield saving may decline a bit, but inflation will eat less into your cash. Everyday people, families, young professionals and retirees. In short, cheaper borrowing but potentially less return on parked cash. But economists warn that this is not a green light for unlimited cards. Economists on news panel. Economists say that 1 or 2 rate cuts are likely, but the Fed will trade carefully. If inflation bounces back, they could slam on the brakes on. And let's not forget the election wild card. With the 2025 presidential race heating up, the Fed is under pressure to stay independent and avoid appearing political. Trump and Harris campaign trail footage and Fed building in background. Still, after months of economic uncertainty, many Americans may finally get a break from rising costs and borrowing headaches. Whether you are buying a home, growing a business, or just paying off debt, a rate cut could be a real financial debt. Whether you are buying a home, growing a business, or you are paying off debt, a rate cut could be a real financial reset. Small business reopening, family buying a car, mortgage approach stamp. Fed rise September, markets move will Fed rise September, markets move, will rates finally fall? Subscribe for more economics updates and market news.